Welcome to second episode of the Money Matrix. If you think the American Revolution ended with independence, you're wrong. Because the real war didn't start with guns, it started with money. What if I told you? The biggest threat to America wasn't Britain, wasn't war, wasn't invasion, but two men who hated each other. And their private war over money still decides who controls your wealth today. This isn't history, this is the system you live inside. America won its independence, but financially, it was broken. The Continental Dollar had collapsed, inflation destroyed trust. People feared money itself. The founding fathers were terrified, not of kings, not of armies. They feared money in the wrong hands, and that fear split them into two camps, two visions, two futures. On one side, Alexander Hamilton. Brilliant, ambitious, coldly logical. He believed money must be controlled, or the nation would collapse. On the other side, Thomas Jefferson, idealistic, suspicious of power, terrified of banks. He believed whoever controls money controls the people. This wasn't a disagreement. This was a financial civil war. Hamilton wanted something radical, a national bank, a centralized institution that would control credit, stabilize currency, and tie wealthy investors to the government. His logic was simple. If the rich depend on the government, they'll protect it to Hamilton. Debt wasn't dangerous. Debt was power. Jefferson saw something darker. He believed banks were more dangerous than armies. Banking institutions are more dangerous to liberty than standing armies. Why? Because banks don't conquer land. They conquer people through debt, through interest, through dependency. Jefferson wanted a nation of farmers, small businesses, independent citizens, not debt slaves. The war wasn't fought with guns. It was fought with papers, meetings, deals made in private rooms. Hamilton outmaneuvered Jefferson. He promised politicians wealth. He promised stability. He promised power. And in 1791, Hamilton wins. The first Bank of the United States is born, America's first centralized financial institution. The system Jefferson feared had begun. Jefferson thought the fight wasn't over. The bank had a 20-year limit. He believed once it expired, America would return to freedom, but power never gives itself up. The structure remained, the mindset remained, the dependency grew. Money was no longer neutral. It had a master. Now, ask yourself, who controls money today? Who creates it? Who decides interest rates, inflation, crashes, bailouts? Not voters, not workers, central institutions, the exact system Jefferson warned about. Hamilton didn't just win a debate. He designed the financial architecture of the modern world. Here's the truth. They don't teach you. Money is not neutral. Money is not just currency. Money is control. And once a system is built, it doesn't disappear. It evolves. It hides. It becomes normal. But here's where it gets even darker, because the war didn't end with Hamilton and Jefferson. It continued through banks, through crashes, through something called a central bank. In the next episode of the Money Matrix, I'll show you how this free banking experiment collapsed the economy, destroyed lives, and why it looks terrifyingly similar to modern financial bubbles.